So guys, welcome to our webinar here. This is for our Tanglewood Apartments in Charlotte, North Carolina. We're so excited to bring this opportunity to you guys. So sit back, relax, and let us tell you a little bit more about why we love Tanglewood Apartments, right? So before we get into that, a couple housekeeping items. I kind of mentioned it already. We do have a chat function in there. So if you want to say hi to somebody, go ahead and do the chat. There is a Q&A function, right? So the Q&A box is open. So if you have any questions during the webinar, please pop them in the Q&A. We'll answer it live or we'll answer it on the end of the webinar, but I just want to let you guys know that that function is there. So before we get into the full webinar today, I do have to go through our disclosure. So as you see on your screen, folks, we are here to present an offering, right? That is it's not a guarantee. Everything is an estimate. We estimate, we project that all of our historical data, all of our data we've done to underwrite this deal is accurate. But obviously future results are not indicative of the past. If you have any questions for your lawyers, CPAs, or tax professionals, please reach out to them, as we are none of the above. And also, if you have any questions about what an investment offering is, what a syndication is, or how it does, please reach out to your lawyers and CPAs and tax specialists. So with that, this presentation is not constitute an offer to sell or solicit any offer or any security. This is a 506C offering for accredited investors only. So if you have a question about that, you can reach out to us and ask us if you're accredited or not. So with that being said, what are we going to talk about, right? So our Tanglewood Apartments, you see the beautiful picture there of Charlotte, North Carolina. That is of the Dorita Statesville neighborhood in Charlotte, which is where our property is located. So today, and sorry if I'm looking over here, because I've got a nice menu over here as well too. We've got the company profile, so we'll talk about who we are, who the sponsors are, what our track record is. We'll talk about the deal itself, the executive summary of the highlights. We're talking about the property, go through all the specifics of the property, the location, the floor plans, all the amenities, our CapEx program, what we're going to be doing to the property and make this baby thrive. The overview of the area, the demographics, all the major employers, and who our property management team is, who our third-party property management team, which is very, very key for this property. Then we'll talk about financials, rental comps, sales comps, underwriting assumptions, our pro forma investor returns, and some beautiful cost segregation and tax depreciation opportunities as well. And then from there, we'll go into how we like to invest, or how you can invest into this deal. So with that being said, quick overview, right? This is a 30,000 foot view overview of the opportunity at hand. The address, 3200 Dale-Crest Drive, Charlotte, North Carolina, Tanglewood Apartments. We purchased this already 2 weeks ago. We've already purchased this asset for $8.25 million, right? Our CapEx budget of 2.75 is pretty heavy based on the deal, based on what we have for this opportunity, which is very exciting because we can make this baby scream and make it a very, very amazing investment for all of our investors. Reserves, we're going to have about $879,000, carrying cost $400, closing cost $263, acquisition fee of $173,000, a total in cost of $12,466,000. Now, when we bought this unit, we bought it for $85,000. It's a 96 unit value add just north of Charlotte, North Carolina. Average square foot is 712. Right now, there's a heavy vacancy, right? 31% vacancy, probably closer to 40% economic vacancy. But that's a good thing because we're going to be able to turn this property over quickly with the CapEx program that Jeremiah is going to get into more details. And it was built in 1970 as well too. Some beautiful photos of it on the side. You see some good photos as we keep going along here. So that's a quick overview. Now about us, the Tanglewood Apartments general partnership team consists of JKH Capital, Staggered Equity, Grade Redevelopment, or sorry, Matt's other company is called Grade Redevelopment, but Valor's Capital Partners, Mars Investments, Mullen Capital Partners, and a few others that are joining us as well too. So together we are roughly acquired over $600 million of commercial real estate through value add and utilizing comprehensive in-house property management construction services. So that is who we are. We're very experienced. We've got over 2,000 units under management, about 50 properties transacted, completed by the team. We internally will do all the asset management, all the leasing and development by our third party team. All the renovation is going to be done by our in-house construction team, and then our disposition after we sell the property, make everybody a whole bunch of money. To give a quick overview of the partners itself, so our lead KP is Sean Fuller. Sean's based out of Alaska. He's not available today for the call. He's actually at another investor meeting. But he is CEO of Mars Holdings and Mars Investments. He's got 25 years experience. He is successfully manages 1,000 doors, and I believe he's got another, I think, 500 under contract right now to buy self-storage, and he's plans to add more 250 more units through low-income housing tax credit programs all throughout the United States. He's a whiz when it comes down to business, and we're very excited to have Sean on the team. I'm going to pass it over to Jeremiah, the lead, one of the sponsors on the team. So Jeremiah, go ahead.
Yeah, absolutely. Appreciate it. So, born and raised North Carolina, love it out here. Done a number of transactions on the real estate side. Uh, my bread and butter is the value add. I come from a construction background. So, we used to do multifamily renovation. So, a keen eye on streamlining the process, teams, and things of that nature. So, built my own personal portfolio and then got into the syndication, doing it with teams. And so, looking forward to putting another one in the books. And then I'll pass over to Reshma.
Well, thank you, Jeremiah. So for us, I am a part of Staggered Equity Investments. Me and Prab, we have been working together since my 20s, so since 2019. Just kidding. But yeah, so we have multiple asset classes that we work on. Prab right now couldn't join this call because he is exploring some island near Vancouver for acquisition. He works for a valuation and acquisition company and has been a part of venture capital and investments for more than 18 years now. And we have been in multifamily for close to 8 years. But yes, we have worked with Jeremiah before in our 104 units deal, and we look forward to working with him on this one. Off to you, Matt.
How's it going, guys? My name is Matt Whitney. I've got a background in multifamily mostly, but general kind of commercial appraisals is kind of my expertise out of college. I've been working on building a multifamily portfolio in North Carolina. So I've got some properties in Raleigh, Durham, and Charlotte as well. Do some development as well up in DC, and have some larger properties across the Southeast. So definitely very excited about this opportunity, and can't wait to add it to the list.
Excellent. And I'll go through our Valoris Capital Partners. My name is Jeff Irvig. I'll be your host and MC for the evening. Valoris Capital Partners, we've successfully acquired over $150 million of assets under management and development, close to 1,400 doors under management and development. Our core is value add. So value add, like this property here, is our core asset that we acquire. We also have a few deals that are ground up developments for brand new Class A units, one in St. Pete, Florida, one in San Antonio, Texas. Then we also do some industrial. Actually, just north here of Charlotte and Salisbury, we have an industrial complex we own as well too. That's our team. So myself, Claudio Sanchez, Ritesh Patel, Jim Bone, and Paul Landman, who's our in-house asset management. And then on the team as well, we have Arjun as well from Mullen Capital Partners. I know he's on the call. So, hey, what's going on, Arjun? He is over 17 years of professional sales and management experience. He is also a leader in multifamily syndication and has been involved in numerous different deals with us as well too. So we're very excited about Arjun to join the team as well. It seems a little blank. We got a couple of partners we haven't had a chance to put their information on here, but they'll get up there here soon enough. So what is the offer? What do we talk about? Jeremiah, why don't you go through and give us a good background of this deal and why you love it so much?
Yeah, absolutely. Love it. So obviously the raise here is 4 mil. The minimum here is 50K. We're going to do a refi in 2 years. So it's a 5-year hold. Speaking on the waterfall, so there is a split hurdle, 25% IRR. Actually, obviously we've seen as we hit the highlights, I think this pans out to about 29% IRR, depending on what class you come in at. So let's hit some of the fees. So the acquisition fees, 2%. Asset management fees, the same 2%, and then capital transactions, and that speaks to refi and then the exit at 2%. But we aim to definitely exceed all expectations regarding that hurdle and the IRR. So we're going to be working hard for you guys. So regarding the investor classes, it's broken down into three. So the preps are really attractive. So we did a 9, 10, and 12% prep. Able to do that because we got this at such a good price, such a great deal. So 50K to 99 is 9% prep. Still your projected IRR 29.81, equity multiple 2.24. Very healthy numbers. If you want to come in with 100K as a minimum, so 100K to 499, that puts you at 10% prep. So a little boost on your IRR and your multiple. And then at 500K plus, we thought we'd go ahead and do a 12% prep, which kicks you up to a 30% plus IRR and a 2.25% equity multiple. So again, very, very attractive numbers, but the deal supports it. So we want to make sure we spread that love. And then on the highlights, touch on it. So 96 units, obviously, great mix of units. So was very excited about this. So 16 ones, 45 two ones, and 35 3 1.5. So really good mix of units. Really adds to the NOI as far as what we're able to hit on the rent rates. So again, purchased this at 8.25. We had an appraisal done. So the appraisal actually came in at 8.65. So 400K instant equity right off the bat, which we love, getting money and valuation at close. It's always a fun experience. Price per door, 86. Jeff hit on that earlier. And then the appraised stabilization value came in at 18.1. So that'll be at our 2-year refi. So again, the average, I think that average is on 10% pref. So the 29.81% IRR, 2.24, what we just touched on. Net profit there is about 6.76 mil. So again, a lot of meat to share on the bone. So value add capex at 2.75, and we can. What's the other slide? And I'll get into the capex a little bit later. Excited about the capex as well. Doing a lot of fun things and a lot of value add to the property, making it a pretty attractive asset. So property overview. Let's see here. So 1970s, we hit on that 96 units here in Charlotte, North Carolina. So I know a lot of people we have from out west. So welcome to the East Coast. Welcome to Charlotte. Great market, one of the top markets in the country. Currently have a net migration. I mean, it's a growing city. You probably heard about it in some of the publications. A lot of growth out here, which contributes to rent increases and things like that, and even did well when there was a lot of inventory. We have a net migration of about 117 people moving in the city per day. So a lot of people looking for a lot of places to stay. So on a very attractive demand metrics. And then also plenty of parking here. So 14 buildings, garden style, 2-story, average size, as spoke to earlier, 712 square feet. Really good layout in the inside though. And we'll share more pictures and photos of the property on the inside. So plenty of parking, and then 2.2 spaces per. So a lot of spread out land for sure. And then location. So as you read over some of the OM in the slides, kind of to the point, a commuter's dream. So it does have a bus line that goes through. So this is workforce housing. So so it's right off the highway. So it's in a key point. So one, it's right in the middle of Highway 77, Highway 85, and then a main artery, which is Graham Street, that leads right into downtown Charlotte. So you're actually about 7-8 minutes away from downtown Charlotte. North Graham goes directly into Charlotte. Also regarding location, a lot of development coming up the north end corridor where this is at. One anchor is a 76-acre new development. They started probably about 4 or 5 years ago. That's Camp North End. The mantra there is workplace learn, and stay. So a mixed class of it's like the old mills that you guys may have seen where they kind of redevelop and do something really nice. So a lot of retail, some multifamily, some office, and things of that nature. So very attractive, but just kind of a point to the location. And this property is in the path of progress, and that's what we like to purchase when we do the value add. We like to buy on the curve. We don't want to be the first ones in, and also not the last. So a really great location overall. So very excited. Additionally, it's also primarily in a residential area. So really, really clean and crisp neighborhood. You're seeing some renovations on some of the single family houses, but it's a really secluded and safe neighborhood overall. So when we fix this one up, it'll add to the area for sure.
Jeremiah, I love saying that we like to purchase the ugly building in the beautiful neighborhood, right?
Absolutely.
Because that way we can make it beautiful and just enhance the community, enhance the neighborhood, and make it a better place for the residents and the neighbors to live. So
For sure. Absolutely. Investing 101 value add. So yeah, floor plans, they're pretty standard. So you have your 1-1s, they're pretty standard across the board, your 2-1s, same thing there, and then your 3 1.5. So they walk very well. So again, we'll get some additional photos and things like that, but kind of your standard, but a really great unit mix for sure. So and then amenities. So obviously we have central air, Wi-Fi, et cetera. We do have on-site leasing office, et cetera. There was a laundry facility here, but we're going to increase the aim here on the CapEx, which I'll jump into in just a few, is to add washer dryer connections. The budget allows us to do that, so we're looking to do so. And then CapEx program. This is where the fun happens. So yeah, so overall, we got some great labor rates in procurement of materials with our vendors. So the CapEx program is essentially, we're going to do the outside and the inside. It's going to rebrand the property. So essentially, we're doing new kitchen cabinets. So that's going to be kitchens and bathrooms, so new vanities there as well. New countertops, so we're looking to go with granite or something along that line. The prices are really good, so we decided to do so. Stainless steel kitchen packages, washer dryer install, as well as the appliance packages themselves. We're going with new luxury vinyl plank floors. They have some really good colors, so I'm sure you guys have seen different renovations. They come out really well and very durable. On the bathrooms, we're doing new shower surround. Obviously, we spoke about the washer, dryer, etc. All new fixtures. Probably going with like a satin handles and things of that nature. Light fixtures. So really a redoing of all the unit. Really crisp, really clean, and very attractive. So very, very excited about that. And we can share what some of those details look like a little later if need be. The community improvements on the exteriors, we're again rebranding the whole property. So we're going to paint the exteriors, the full exteriors. The good thing on this property, a lot of the windows have been replaced. This is a 1970 property, so a lot of windows have been replaced. So we don't have to do a lot there. There are a couple that haven't been, so we'll do that. There's a lot of HVAC systems that have been replaced, so locked up on that as well. And then same thing with some electric. Now we are going to update some of the remaining, but we did catch a break on some of those already being done. But as a whole, yeah, so we're painting the buildings, we're doing new roofing, landscape, we're pulling everything out. I think that may have already started, and putting in something fresh. So it's going to be fresh, it's going to be new. Same thing with the leasing office, new asphalt seal coating, monument signage. We'll do something pretty attractive with some flowers around that as well. So very, very inviting community with new aesthetics for sure. So, and then also, obviously logistics. I mean, we've done this a number of times, right? So we start with the exterior. The aim there is we really want to start to rebrand the property. I keep saying the rebrand. So we'll start with the exteriors to really start to show that this is a different asset. And then what that also does is when we start our renovations on the interior, we may, obviously it'll be in batches. So if we have like 3 or 4 or 5, being that the outside is already attractive and we've developed that new aesthetic, we can actually start showing units and start that lease up process. So, so logistics are painting, roofing, we'll do the landscaping, et cetera. Obviously, we'll kick off the interiors around the same time, but we look to start that lease up as soon as possible. So, really, really good logistics there. And with that, I believe I'll kick it off to Matt to let him speak about some of the Charlotte in the area, et cetera, et cetera.
I think I'll take
Oh,
this
excuse me, Reshma. I'm sorry.
from, yes, Jeremiah. I was teasing him earlier that he's going before me, so he will make me look better. I think that's a good revenge. Point taken. Thank you. All right. So before I start with this slide, I just wanted to know from all of you, and you can put it in the chat, raise your hands, and we can be more interactive here on what is the first thing that you look before you invest in a deal. And if that's what you're looking to do here, like what is the fact that that has impressed you most about this so far, right? So what is your first thing that you look before you invest? I'll give everybody maybe 30 seconds here to answer that question. And meantime, Jeremiah, I know that you highlighted more on the CapEx side and the return side. And with your history of you being in Charlotte, if you can tell me in a very personalized way on how you have seen Charlotte transform, that probably is very helpful for everybody to understand how the city is growing.
Absolutely. So, no, I love Charlotte, very bullish on Charlotte. One, I mean, not only I love it, if you read the headlines, a lot of not only people moving here, but also companies and headquarters. So you had, I think, 2 banks, they formed together, and for Truist, they moved their headquarters here. I mean, there's a laundry list of different headquarters that moved their company here. And one that's cost of living, quality of living, and you know the bang of your buck, but also it's such a growing area, and that's on the work side and opportunity side, but that's also quality of life side. Um, and so with that comes a lot of opportunity, and with that opportunity, and with so many people moving to Charlotte and calling it their home as well, obviously there's a need and demand for housing, and then that's where we come in at on the investment side, and that can be new construction. I like the value add just because you get it below construction costs, but you provide really attractive and really comfortable living conditions for those that are looking to call Charlotte their home. So.
Okay. All right, cool. Thank you. So, yep. So, the point that I'm trying to highlight here is that everyone who is trying to invest in real estate, right? They know that there's 3 things that's the most important, and that is location, location, and location. That I think people would just never forget that, you can do the rehab, 2.75 million. It's a heavy lift. You can put washer dryer in there to raise rent, but one thing you cannot change is location. And this is why we like this property so much, is because of its location being so close to Charlotte Uptown. That's what they call it here. They really don't call that downtown. And this property being in the middle of a residential zone where there's not many options for people to really rent out in a reasonable price. So that's why we like this location very much. A little bit about Charlotte. So Charlotte is the finance hub of the whole country. One of the largest banks and financial institutions are headquartered here. Bank of America has its center here from the very beginning. This is where the Bank of America started, right? And we have Wells Fargo, big presence here. Microsoft moved here a few years ago, and so on and so forth. So there's a lot of employment here, hence people are moving here. The kind of crowd that we get here is we get a lot of people from who are running away from snow. So mostly the New Yorkers has painted this state purple, or this city at least purple. And we have a lot of people moving from West Coast who wants to be in a good weather, but still don't want to pay a fortune to be able to live in a house. So we have a good mix of crowd here coming from all directions from this country. So Charlotte is definitely a growing city. So moving on to the next slide. Like you can see there, these are the key demographics and metrics that we have today. But again, it has been such a dynamic city that this will only be growing, and you will see more numbers of people moving here. You know, the constant amount of construction that has been going on here is crazy, but at the same time, we have a lot of demand, so supply hasn't catch up here yet. Moving on to the next slide. Right. So Atrium Health is one of the biggest healthcare providers here, but rest of the employers, as you see, will mostly be banking. And don't get, fooled by these numbers, because when you say Bank of America and Wells Fargo employ so many people, these are just the full-time employees that they account for. They do not account for the contractors and the terminal workers that they bring to this city. Hence, it doesn't show as number one, but they are the largest employment providers. As you know, these banks and institutions tend to, have more contract workers than they have the full times. Moving on to the next slide. So it's the toughest part, I should say, being in real estate for this long. We recognize the value of property management. Hence, there were multiple property management team that was vented out, and because of prior relationship, their track records, Wellington Advisors were our choice to manage this property because they play such a key role, right? So all the money is actually made in property management for real estate. Everybody who knows real estate pretty much knows that. So this was our choice to manage this property. I'm sure there will be another webinar when we can bring in the leaders from Wellington Advisors and tell you more about it. But we assure you that their track record is pretty impressive, and that's why they became the part of this deal and part of our team after venting out probably like 6 to 8 other property management company. All right. And with that, I think Matt would like us to walk through some market comps here.
Yeah, absolutely. So just to highlight some of that we just went over, Charlotte's not going anywhere. One of my favorite markets. I've got some property in Raleigh and Durham. Like I said, love the Southeast, love North Carolina for a lot of different reasons. And just to highlight real quick, a couple of the chat responses. I know we went over a little bit, but not in too much detail, kind of about the team's background, kind of with a proven track record. Just want to highlight that Jeremiah, Reshma, and some of the other GP partners on this deal have had pretty extensive experience with other properties, even in the Charlotte market. Like they mentioned, there's a 104 unit asset very close by, about a 5-minute drive away. That one's kind of come full circle. So they've had the experience in working with a property manager, going through the renovation process, and completely repositioning that asset. So essentially the exact same business case that's going to happen on this deal has been done before by the people who are speaking to you, which I think is a great thing. Really helps lower some of the unknowns and risk if you're doing the same thing over again. And myself as well as some of the panelists also own other multifamily properties in a very close relation to the subject property that we're presenting here. So I can personally attest to the fact that the market's changing. I see new development and flips happening on 1 or 2 streets away where I own some units. So we're definitely bullish on the market area, and so can talk a little bit about the market comps here. My background in commercial real estate appraisal has been very helpful in making me feel more confident when investing in deals personally. Obviously, knowing what your property is going to be worth at the end of the day and what you're buying it for are 2 of the biggest factors. And how you figure that out is comparing the property to what else has sold, and kind of projecting what your income can be on a pro forma basis. So here we've got some of the market comps that are recent sales in and around the kind of Dorita, Statesville submarket. On a stabilized basis, like Jeremiah mentioned, we do have an appraisal at this point, which makes us feel a lot more confident as well. I mean, this has all been reviewed by appraisers, and they agree that the property's worth quite a bit more once we've done everything which we are planning to do to it. The as-is basis of 86,000 per door, which we're acquiring the property, or sorry, have acquired the property at, is also pretty much unheard of in the Charlotte market, especially for 2 and 3 bedroom units. So the property, as you guys saw for the unit mix, is mostly 2 and 3 bedrooms, which is very, very good. Here we're going through some of the rental comps. As you can see, rents are pretty high and are only going to continue to increase in and around that submarket. So we are very bullish on kind of Charlotte rents and where we acquired this property at. Can continue going through some of those other rental comps there. And just wanted to highlight Thompson Place Apartments. That's a very similar year of construction, 1970. Similar size. So I'd say it's a fantastic comparable with a slightly superior location. However, that was bought on a pretty similar as-is basis for $130,000 per unit, which is considerably more than the $86,000 basis on the subject property. So that essentially leaves a very large opportunity for the investors in this deal. And like any deal, I'm looking at the kind of basis. So moving forward onto the underwriting assumptions. As Jeremiah mentioned, we have a 5-year hold. And we'll be doing a refinance in year 2. So that $18.1 million stabilized number was projected at the end of year 2. That should allow us to return all, if not a little bit more than the investor capital, which really helps make it a fantastic deal. Having your capital returned and then still getting income as well as returns up until year 5. So CapEx 2.75. Our target exit price is 20 million, which we feel very good about. I think all the numbers that we've presented thus far are very conservative. And rent growth, we still think will be strong in the Charlotte market. So you can see the acquisition debt as well. We've got a loan that covers both the acquisition as well as the CapEx at just shy of 9 million at a pretty attractive rate for bridge debt in the current market, and an interest-only period as well, which helps in the short term with cash flow to the investors. I'll pass it back to Jeremiah, I believe, who can speak more about the unit mix and target rents.
Yeah, absolutely. Yeah, great info, Matt, as well as Reshma. Appreciate it. So yeah, unit mix and target rents. So as Matt just kind of covered some of the rental comps, you can see I think we projected 13 on the 2 beds, which we usually use as a basis. I think we projected, was it 1375 for our target rent? If you look at the rent comps, they exceed that pretty substantially. So our target rent, we wanted to underwrite this as conservatively as possible. Very excited about it. So got it at a great price point. We underwrote our numbers pretty conservatively. We feel like after year 1 and 2, I think that's when we were targeting that rent at the year 2. The aim is, and it looks like we should surpass that even in year 1. So a lot of opportunity there. You can look at some of the rent comps, and obviously some of those have already increased. So that's going to be market tenants as well as some programs. We've seen some different programs where they do stuff with like veterans and things like that. So they already pay more than that. I think one of the comps on here, they are doing $1,450 on the 2 beds. Some go as high as $1,600. So a really good spot to exceed some of the expectations we have on here. So very excited about that unit mix and target rents. And to Matt's point, we do have another asset. Matt has a smaller commercial multi right down the street. And then Reshma and I have worked together on a 104 unit around the corner. So very familiar with this area, very bullish on it, a lot of growth. We'll continue to buy here. we're actually continuing to source here just because it's such a path of progress. And so very excited about seeing what we can do to extend it. So if anyone does jump in, those monthly newsletters, we always love kind of exceeding expectations. So look forward to doing that here as well.
Yep, under promise and over deliver, right? That's our mantra for this property, right? And it seems like we're I mean, with the numbers that we're projecting, I mean, it's amazing to kind of look at how it can really take off, even though we're doing this as a very conservative basis, right? So this is what our pro forma looks like. If you're a numbers person, you might want to just like hone in on this slide and just look at it and see, and you can ask a bunch of questions or based on our underwriting. I'm not going to bore everybody too much with it, but it kind of shows you year one projections. And as we increase year 2, 3, 4, right, what that looks like. You can notice on the top here, it says refinance in year 2, where our total net income has dramatically increased from a million to 1.5 million just from getting this thing rented back up and putting it back stabilized, right? That's just stabilizing the property, not providing, not even increasing the rents more to market, not even increasing or adding more value-add amenities like parking or anything else that we could do. That's just by getting this property up and rented and stabilized, right? Which is beautiful. Year 3, 4, and 5, we're going to be cash flowing. You see our DSCR definitely keeps going up. And then year 5, we're going to sell this property where everybody will make a nice equitable return on it. So as we go through, you'll see what our investor returns look like. These are kind of staggered for our 9, 10, and 12 pref, as you see in the top slide there. The hurdles is the first hurdle. The pref goes all, or the returns go all to the LPs, 0 to the GP. Once we meet those 9, 10, and 12 prefs, then we'll split all the profits afterwards at a 65-35% split. As Jeremiah mentioned in the beginning, we do have our final hurdle, which is 25% IAR. Once we meet the 25% IAR, then we split it at 55-45% GP, and that's when you see that the year-end profit goes down a little bit to the LPs. But at that point, you've already made 25% return on your money, so it is pretty darn good either which way. Total return summary for the 9% pref at 29.81. You'll see the total returns coming to everybody, right, to the entire deal. And then the waterfall, distribution waterfall. So what does that look like? First, we accrue all of our unpaid prefs, right, to our LPs, to the investors, our co-investors here. And then we will receive 100% of their original capital back in year 2. At that point, we'll do distributions up to 25% IR, as I mentioned, at a 65-35 split. And then excess distributions over that 25% IR are split for 55-45. So what does that look like on an annual projection if I were a $50,000 investment at a 9% pref? Well, year 1, we're projecting about 1,800 or so in returns. Year 2, it increases up to 3,700. That's also when we're going to project to return $50,000 of capital. So after year 2, your total return will be, if you do the math, 53,000, right? And we're going to cash flow years 3, 4, and 5, and then sell it. So the total IR for this 9% pref is 29.81, 123% total return, and a 2.25 equity multiple on it. Very good numbers here. As we go through and look at the 10 pref, which is the minimum investment of 100,000, same scenario, 29.89. So our IR does increase. Our cumulative return goes to 124%. So it's a little bit higher. If you have the initial investment above 100,000, so 100,000 to $499.99 for that investment class. And our final class is our $500,000 investment. So for your big check writers out there, this one has a 12% preferred return. So you can see the numbers all equivalent to your initial investment. With our 12% preferred return, IR jumps up to over 30%. Cumulative return up to 100. Actually, that might be, I think 24.82% with a 2.25 equity multiple. Again, all of these scenarios year 2 is a year to notice, right? Because that's when we're going to be returning capital back to all the investors who invest in the deal. And then we're going to cash flow from there on out. It's beautiful, beautiful stuff, right? So total return investment value, 1.124 million out of your 500 over a 5-year period. You can't beat that. That is amazing. So you got 500 grand to invest. Here we go. We already have a couple of those investors in there right now as we speak. So another beautiful thing about these properties or about investing in multifamily, why people love investing in commercial real estate, is for the depreciation, right? So everyone knows that your normal asset will depreciate over 27.5 years. What we do is we hire a third party to come in and do a cost segregation study. They break down all the aspects of that property and depreciate every single piece of it. And minus the land, they can depreciate over 32% of that value in the first year. So with a bonus depreciation of up to 60%, we can take advantage of that. So you can see those numbers in first year. So 1.5 million is depreciable over the first year. Obviously, that's split down to our GPs and our LPs, or LPs into GPs. So LPs will get their 65% of that, which will come out to roughly about 25 or so percent of your total investment. So think about it as a paper loss. End of the year, you will get a $25,000 loss at the end of this year. So if you're looking for a tax write-off right now, this is the time to do it, and this is the property to invest in. That is probably the number one reason why investors invest in commercial real estate, is for the bonus depreciation. And if Congress goes ahead and passes the law that's been put out in front of them, which they haven't denied yet, they haven't approved, they haven't denied, we could see 100% of bonus appreciation again, which that number will go up significantly for this end of the year. So very exciting stuff. If you have more questions on this, talk to your tax guy. I'm not a tax guy, I just know about it. So but talk to your tax professional. They will help you out and understand about bonus appreciation, how you can take advantage of that on your tax returns. There's a lot of stipulations for that. So please make sure you understand that before diving into any investment. Now, how do we invest in this deal? What's our process, right? So first, you're going to review the deal, right? And go into our, what we call a cash flow portal, is our deal room. It has all the documents you see here, has the entire slideshow, has a bunch of pictures in there, has all the things you need to know about the property. You sign the documents in cash flow portal. It'll spit out and tell you what your wiring instructions are. Only wire to the instructions in cash flow portal. If you have any questions, talk to your sponsor who brought you this deal. You fund the deal, and then you're good to go. The deal's already closed, right? So that's the good news. We already own the deal. Now it's a guaranteed investment. So you put your money in, and it's a guaranteed investment, for not guaranteed return, but guarantee that you're in this investment as we move forward. If you're ready to invest, you can scan these QR codes right here. So we'll leave this one up for a second. This is for Valoris, for JKH Capital, and Matt's company, MDWB Investments, LLC. Next page, we got from Mars Investments for Sean. We got Staggered Equity Investments for Reshma and Prab, and Mullen Capital for Arjun. We've got a couple of others that we'll get in there as well too. So if you have any questions, reach out to your sponsor. Now is the time when you get answers to ask some questions. We only had one question here that was answered by Matt, our sponsor here. So Matt, we appreciate that. So Michael asked a question: are you going to change the name as part of the rebrand? And Matt answered, yes, 100%. Our goal and part of the CapEx is to change the name and the aesthetic of the property to make it a completely new apartment complex for the future residents of that community. So very excited, because we want to have a new, fresh start for the apartments. So we're not going to tell you what it's going to be called yet, because we'll make that unveiling in one of our investor emails. And by the way, I didn't tell that. Someone might ask this question. Maybe you did, maybe don't. How often do we communicate with you on these properties? So in the first year, we'll send out monthly newsletters, right? So giving you updates of the property, where we stand, what is our CapEx, what have we done, what are the improvements we've looked at. And then once we get the property stabilized, we'll start sending all the KPIs, so you can see what our occupancy is, what our pro forma is, what our compared to our pro forma, what our returns are, what our cash flow is. And obviously within the first year, we hope to get some good distributions for everybody as well too. So I don't see any other questions coming in, but guys, did we leave anything out? Is there anything anybody can think of that might an investor has asked you about the property in the past that maybe you want to bring up and let us know or tell everybody?
Looks like Joe sent a question just recently. What do you plan to refi into after year 3? We'll most likely look at agency debt, much more attractive, much lower rates, and that'll allow us to cash flow that much better at the time. So
Yeah.
And the beautiful thing there is we should find ourselves on the other side of lower rates. So they're trending in the right direction. So I think we put an exit at 6.625 on the cap. I think our underwriting put on a rate we refi out in a 6.6% or 6.25% interest. We could probably beat that today, but in year 2 we should be well below that. So again, another aspect of underwriting conservatively, but landing in a really opportune space.
Yep. One more thing I'd love to add is that this deal didn't come about overnight. I know Jeremiah and I first walked it about 4 years ago. So we've been tracking this deal for a very long time, knowing the potential that it's had, and we were lucky enough to be able to put a team together that can handle the acquisition and whole process. But it's very exciting to see that all come together, and it's a culmination of quite a few years of waiting and planning to get to this point. So yeah.
Absolutely.
Excellent. Well, we assembled the dream team here. We got this property to close. Now we're just raising a little bit extra post-close for some CapEx. So, fellas, ladies and gentlemen, if you are interested in investing in this deal, please reach out to your sponsor. I'll go back to those pages with the QR codes. You can scan these and you can put your investment in right away. We have a feeling this will be closed out pretty quickly. So, get your investments in and talk to your sponsor if you have any questions. But I believe that's it. So we record time 50 minutes, right, for a webinar about a deal on a beautiful Thursday afternoon. So again, we appreciate everyone's time.
And Jeff, I'll stop you here just a second. I know
Sure.
there are a few investors who reached out and said, can we walk the property? You absolutely can. So just reach out with the QR codes or reach out through the emails or whatever is more convenient for you. And we will set up a time, for everybody, maybe as a group or for you to walk the property whenever it's convenient for you. So we are there pretty much every day.
Look forward to it.
Beautiful. Love it. All right. Well, with that being said, we appreciate your time. Thank you so much, folks. We look
Appreciate
forward
it,
to
guys.
you. Have
Thanks,
a great
guys.
day.